If you were born before 1961, stop whatever you are doing right now, because the IRS just quietly released 5 updated tax forms for the 2026 filing year, and every single one of them was designed specifically for seniors. Not for working adults, not for high-income investors. For you, 5 forms. Each one either reduces what you owe, increases what you get back, or stops the government from taking money it was never legally entitled to in the first place. And here is the part that should make you angry. Not one of these forms comes with a phone call. Not one of them arrives in your mailbox with a note that says, hey, you qualify for this. The IRS updated them, posted them, and then went completely silent. Because every dollar you do not claim is a dollar that stays exactly where it is, locked inside the federal system forever. In the next few minutes, I am going to walk you through all 5 forms, one at a time in plain English. No jargon, no tax school, just exactly what each form is, why it matters, and where to get it. Stay with me to the end, because form number 5 is the one that has already saved retired couples over $6,000 in a single year. And I can almost guarantee your tax preparer has never mentioned it to you once. Before I go any further, I need to clear something up, because this one misunderstanding is the reason most seniors leave videos like this early and walk away leaving real money behind. Some people hear the words IRS forms for seniors and assume this is only for people who are struggling financially. They think, I am relatively comfortable, so this is not for me. They click away. Other people assume the opposite. They think it is some advanced strategy reserved for wealthy retirees with private accountants. They think, I just have Social Security and a small pension, so this definitely does not apply to me. They click away too. Both of those people are wrong, and both of them are losing money they already earned. This is for every single person born before 1961. It does not matter if your entire monthly income is one Social Security check. It does not matter if you have a pension, savings, a paid-off home, and a retirement portfolio. Somewhere on this list, there is a form with your name on it. The only thing that disqualifies you is not knowing these forms exist. Here's the uncomfortable truth about the American tax system that nobody wants to say out loud. The IRS is never going to call your phone to let you know you have money waiting. Your tax preparer is not getting paid extra to hunt down these specialized forms for you. The structural incentive for the entire system is silence. Every dollar you fail to claim stays exactly where it is. That is not a conspiracy theory. That is simply how a passive, rules-based tax code works. Quick ground rule before form number 1. Everything I'm showing you is verified directly from irs.gov and ssa.gov. I will give you the exact form number, the exact purpose, and exactly where to find it. Nothing on this list is a loophole. Nothing is aggressive. Everything is a form the IRS built and made available specifically for people in your situation. The only question is whether you file it. This is for educational purposes only and is not personalized tax or legal advice. Always consult a licensed CPA or enrolled agent before taking action. What I am giving you today is the map. A qualified professional helps you drive it. Form number 1 is the single most consistently ignored and improperly filed form in the entire IRS catalog for seniors. Yet for anyone born before 1961, it is the fastest way to put real cash back into your monthly budget. Not next April, next month. This is Form W4P, officially titled the Withholding Certificate for Periodic Pension or Annuity Payments, available free at irs.gov. Here is the problem most retirees do not realize they have. When you started receiving distributions from your pension or IRA, someone set up your federal tax withholding. Maybe you chose a number. Maybe your administrator chose one for you. Maybe the system just defaulted to a standard rate and nobody asked you a single question. In most cases, that default rate is too high. When large financial institutions set up your monthly distributions, they do not know your full picture. They do not know your marital status, your medical expenses, or your planned deductions. To protect themselves from liability, these automated systems default to a high-tier formula that assumes you have significant other taxable income hiding somewhere else. So the system takes more than you owe every single month. You wait until April, you get a refund check, you feel relieved, maybe even grateful. But that refund was yours in January and February and every month before that. You did not win anything. You simply gave the federal government a completely interest-free loan with your own retirement money for 12 straight months while your household budget stayed tighter than it needed to be. Meet Howard. He is 69. He retired from a manufacturing company in Indiana 3 years ago and receives a $43,000 annual pension. His administrator defaulted to 10% withholding when distributions began. That is $4,300 a year taken before he ever touches it. But Howard is 69. He has the senior bonus deduction. He has the standard deduction. When you run his actual numbers for 2026, his real federal tax liability on that pension is closer to $1,500. That means Howard has been sending $2,800 a year to the IRS that he did not owe. every single year for 3 years. Over $8,000 sitting with the government instead of in his bank account. More than $200 every single month that should be covering his bills instead of sitting in a federal holding fund. Form W4P is the fix. Go to irs.gov, download the form, complete the withholding worksheet, and submit it to your pension administrator or IRA custodian. His withholding adjusts the following month, not next filing season. The following month, if you are receiving pension or IRA distributions and you suspect you are over withheld, this is your starting point. Now, form number 2, because Form 1 deals with your pension and IRA. Form 2 deals with your Social Security check, and its default setting is damaging seniors every year in 2 completely opposite directions at the same time. This is Form W4V, formerly called the Voluntary Withholding Request. Available at ssa.gov and irs.gov, completely free. Here's something most retirees have never been told. When your Social Security payments begin, the government sets your federal tax withholding at exactly 0% by default. Not 5, not 2, 0. For some seniors, that is perfectly fine. If your total income is low enough that none of your Social Security is taxable, you do not need withholding. But for millions of seniors whose benefits are partially taxable because of other income, that zero default creates a disaster every April. They coast through the entire year with no withholding setup, completely unaware that a tax debt is building. Then tax season arrives, and instead of a refund, they get hit with a massive, unexpected bill. And if they owe more than $1,000 at year end, the IRS adds an underpayment penalty on top of it. But the danger also runs the other direction. Millions of other seniors set up a withholding rate years ago when their income was higher and never updated it. Life changed. Income dropped. The automated system kept slicing the same oversized chunk out of their Social Security check every single month. Meet Beverly and Carl. Both are 71. Their combined annual Social Security is $38,000. Carl set up 22% withholding years ago when they were pulling heavily from retirement accounts, and their taxable income was much higher. In 2026, their actual effective rate on that Social Security is closer to 10%. They are overpaying by roughly $3,000 a year. $250 every single month sitting idle instead of covering prescriptions and home insurance. One updated W4V fixes it permanently. The form gives you 4 flat choices, 7%, 10%, 12%, or 22%. Calculate your actual tax bracket, check the right box, and submit it. Mail it to your Social Security office, bring it in person, or call 1-800-772-1213. Form number 3 was built specifically and exclusively for seniors age 65 and older, not general taxpayers, specifically for you. And if your preparer is not using it, you need to ask them directly before you sign your return this year. This is Form 1040-SR, the U.S. tax return for seniors, available at irs.gov and inside all major tax software platforms, free. Every single year, millions of older Americans file their taxes on the standard Form 1040 purely out of habit. No idea the IRS created a completely separate return designed specifically for people born before 1961. The difference is not just larger font. Form 1040-SR was engineered from the ground up for retirees. It has a dedicated section for calculating the senior bonus deduction under the 2026 tax rules. That is the additional deduction available specifically to filers born before December 31st, 1961. Single filers get a meaningful amount stacked on top of the standard deduction. Married couples, where both spouses qualify, get a combined deduction that is even larger. When all 3 deduction layers are properly stacked on 1040-SR, qualifying couples can shield a substantial portion of their total income from federal tax entirely. That section does not surface the same way on the regular 1040. Things get missed, deductions get skipped. Not because anyone is dishonest, because the form was not designed to prompt them. 1040-SR also has a purpose-built layout for Social Security income and pension distributions, the 2 most common income sources in retirement. The standard 1040 was designed for a working adult with a W-2. The 1040-SR was designed for you. Here's the part that should concern you. Most tax software defaults to the standard 1040. Most preparers do not switch you over unless you ask, which means right now there is a real chance your return has been filed on the wrong form for years and deductions you were fully entitled to were never captured. Ask your tax preparer 4 words before you sign anything this year. Are you using 1040-SR? If the answer is no, demand a clear explanation. If they cannot give you one, treat that as a red flag. If you file yourself, Look for the 65 or older checkbox before you submit and verify the top of your draft return says 1040-SR, not just 1040, 30 seconds, potentially hundreds of dollars. Form number 4 is where seniors lose the most money silently, not through bad advice, not through fraud, through a documentation gap nobody told them to close years ago. For some retirees, the damage is already in the tens of thousands. This is Form 8606, filed with your annual tax return, free. This is the form that prevents you from being taxed twice on the same dollar. Most IRA contributions over the years were tax deductible. You put money in, reduced your taxable income that year, and agreed to pay taxes when you took it out in retirement. That is the standard deal. But some people, particularly in years when their income was too high or they were covered by a workplace retirement plan, could not deduct their IRA contributions. They put in after-tax money, money they had already paid income tax on. This amount has a name, your IRA basis. If that basis is never documented, the IRS has no record you already paid tax on it. So when distributions begin, the system treats every dollar coming out as pre-tax money and taxes the full amount. You pay income tax on the same dollar twice, and nobody calls to tell you it happened. Meet Raymond. He is 73 and retired from a career in finance. Over 12 years, he made $55,000 in non-deductible IRA contributions. Form 8606 was never filed consistently. His prior accountant never flagged it. Now he is taking required minimum distributions and his custodian reports every dollar as fully taxable. That $55,000 in already taxed contributions is being taxed again. Thousands of dollars gone. Permanently, Form 8606 documents your basis with the IRS and ensures the already taxed portion of your distributions is excluded when you take money out. This form is also critical if you have done or plan a backdoor Roth conversion. Without it, the conversion looks fully taxable on paper and you get a bill for money you already paid tax on. Pull out your last 3 to 5 tax returns right now. Look for Form 8606 in the package. If you have ever made non-deductible IRA contributions and do not see it consistently filed, call your CPA today, not at the start of tax season. Today. The longer this goes undocumented, the harder it becomes to reconstruct your basis accurately. Here is another situation where this form becomes urgent that most people overlook. If you converted a traditional IRA to a Roth IRA at any point, even years ago, and Form 8606 was not filed at the time, the IRS treated that entire conversion as taxable income. If a portion of that IRA was funded with after-tax dollars, you may have paid tax on money you had already been taxed on once before. In some cases, amended returns can recover that overpayment, but the window to amend is limited and the clock does not stop. Every year you wait makes it harder to go back and fix. And if you are planning a Roth conversion in the coming years because you want to reduce your required minimum distributions or leave tax-free money to your heirs, Form 8606 becomes even more important going forward. You need a clean, documented basis on file before you convert, so the IRS can accurately calculate how much of the conversion is truly taxable versus how much is simply a return of contributions you already paid tax on. Without it, the entire amount appears taxable on paper and you absorb a tax hit you never should have owed. A CPA who understands IRA basis documentation is worth every dollar for this specific conversation. Now form number 5, the one I promised at the very beginning. The form almost no senior has ever heard of. The one that has saved retired couples over $6,000 in a single year. And if your Medicare premium feels higher than it should be, this form is both the reason why and the solution. To understand why this form exists, you need to understand IRMAA. It stands for Income-Related Monthly Adjustment Amount. It is a Medicare surcharge added on top of your standard Part B and Part D premiums when your income crosses certain thresholds. Here is how it works in 2026. The standard Medicare Part B premium is around $185 per month. That is what most seniors pay. But if your income from 2 years ago exceeded certain levels, Medicare charges you significantly more. The first surcharge tier adds roughly $74 per month. The second adds close to $185 more. Higher tiers stack even further. For married couples, both spouses pay separately. Over a full year, IRMAA surcharges can add up to $2,400, $4,000, $6,000 or more, depending on which income tier you landed in. And here's the trap that catches retirees specifically. Medicare does not look at your current income to set your premiums. It looks at your income from 2 years ago. Your 2026 Medicare premium is based on your 2024 tax return. Think about what that means for someone who retired in 2024. If you worked through most of that year before retiring, your 2024 income included months of full salary. Maybe you sold investments. Maybe you took a large IRA distribution before leaving your job. Maybe you received a pension payout or severance. Whatever the reason, your 2024 income was elevated, much higher than what your actual 2026 retirement income looks like. But Medicare used that inflated number to set your 2026 premiums. You are now paying a surcharge based on income you no longer have. This 2-year look-back rule affects far more retirees than most people realize. Even people who retired years ago can get caught by it if they had a one-time income event, like selling a home, taking a large IRA distribution, receiving a legal settlement, or liquidating an investment account. Any single year where income spiked for a temporary reason can push you into a higher IRMAA tier for the following 2-year Medicare cycle. And once you are in that tier, you stay there until Medicare uses a newer tax year that better reflects your actual situation, which only happens automatically on a 2-year delay, unless you appeal, which is exactly what Form SSA 44 allows you to do. That is correctable. The Social Security Administration built the correction directly into the system. It is Form SSA 44. Form SSA 44 is a life-changing event appeal. It tells Social Security to stop using your 2-year-old income and start evaluating what your income actually looks like right now. 8 qualifying events allow you to file it: marriage, divorce or annulment, death of a spouse, work stoppage meaning retirement, reduction in work hours or income, loss of income, producing property, loss of pension income, and receipt of an employer settlement that temporarily inflated a prior year's income. For most retirees watching this, work stoppage is the one that applies. You retired. Your income dropped. Medicare does not know that unless you tell them by filing this form. Meet Carol. She is 67 and retired from a school administrator position in June of 2024 after 31 years of service. Her 2024 income included a full school year salary plus an early retirement incentive her district offered. Her modified adjusted gross income for 2024 came in at $156,000. That put her in the second IRMAA tier for 2026. Her monthly premium jumped to nearly 2.5 times the standard rate. But Carol's actual 2026 income, Social Security plus a modest pension, is well below the IRMAA threshold. Medicare simply does not know that unless she files the appeal. She submits Form SSA 44, checks the work stoppage box, attaches documentation showing her projected 2026 income, her retirement date, and her current benefits. The Social Security Administration reviews it and reduces her premium back to the standard rate. The savings are immediate. Because she filed early in 2026 and the correction was applied retroactively to January, her total recovery for the year exceeded $4,000. For a married couple where both spouses retired recently and both are paying surcharges, double those numbers. $6,000 in annual premium reductions is not unusual. Form SSA-44 is available at ssa.gov. You can submit it online, mail it, bring it in person, or call 1-800-772-1213. And here is what most people do not realize. You do not have to wait for open enrollment. You do not have to wait for a new calendar year. If you retired last year and you are currently paying an IRMAA surcharge, you can file this week. Let me pull everything together before you go. Here is something I want you to sit with for just a moment before I run through the list. Most of the money being lost by seniors right now is not being lost to scams. It is not being stolen. It is being left behind quietly, month after month, through default settings nobody explained, forms nobody mentioned, and systems that were never designed to remind you they exist. The people administering your pension did not lie to you. Your tax preparer is not necessarily negligent. But the architecture of the system runs in one direction by default, and that direction is not toward your bank account. It requires an active decision, specific knowledge, and the willingness to ask a direct question or submit a single form. That is all. 5 forms, potentially thousands of dollars per year, and now you know exactly where each one lives. Form W4P at irs.gov. Complete the withholding worksheet and submit it to your pension administrator or IRA custodian. Best for anyone over withheld on monthly pension or IRA distributions. Form W4V at ssa.gov. Submit by mail, in person, or by phone. Best for anyone whose Social Security is partially taxable and wants to stop the April surprise or stop overpaying month after month. Form 104 O-SR at irs.gov and all major tax software. Confirm with your preparer they are using it. If you file yourself, verify the top of your return says 104 O-SR. Form 8606 filed with your annual return. If you have made non-deductible IRA contributions or done a backdoor Roth conversion, this protects you from double taxation. If you have not been filing it consistently, call your CPA today, Form SSA-44 at ssa.gov. If you have retired or experienced any qualifying income reduction, file it immediately. The correction applies going forward and often retroactively. If you are only going to do one thing this week, start with Form SSA-44 if you are currently paying an IRMAA surcharge. The savings are the highest and the correction is the most immediate. Then W4P for your pension. Then W4V for Social Security withholding. Then confirm your preparer is using 1040-SR. Then have the Form 8606 conversation with your CPA if you have IRA basis that has never been properly documented. Every form I showed you today already exists. The IRS already accepts it. The SSA already processes it. The money is already legally yours. Not one of these forms is automatic. Not one arrives in your mailbox. Not one comes with a phone call. The entire system is designed so the money stays exactly where it is unless you stand up and claim it yourself. You worked for decades. You paid into this system the entire time. You saved. You planned. You made sacrifices so you could have the retirement you earned. And sitting quietly on government websites right now are forms that were built specifically for people who did exactly what you did. The only thing standing between you and that money is knowing where to look. Now you know. Do one thing before you leave. Send this to someone in your life who is over 65 or getting close. A parent, a sibling, a neighbor, a friend. The odds are strong they are missing at least one of these forms right now. One share from you could be worth thousands of dollars to someone you care about this year. If even one of these forms was new to you today, hit the like button. Subscribe and turn on notifications because next week I am going step by step through the W4P withholding worksheet so you can calculate the exact right number for your situation. Drop a comment right now. Tell me which of these 5 forms you had never heard of before today. Or if you have already used one, tell me how much it saved you. Your experience helps the next person understand this is real, it is verified, and it is money they already earned. You were born before 1961. The forms are waiting. Go file them.